Hello, everyone. How are you doing today? Welcome back to CryptoLiveLeak. We have some really exciting guests with us here today. First, let me introduce the hosts. My name is Ken Garofalo. We have with us Benton Yan at Bentwan27. And then we have our wonderful guests here, Phil Champagne of Hayek Lab and Kevin Mehrabi, the founder of StableTech. How are you guys doing today? And welcome to the show.
Can't complain.
If you guys don't know, Tezos Tuesday is sort of a play on Taco Tuesday, right? With the taco being the unofficial mascot of Tezos. So just to clarify that. But we're going to get right into it, guys. But before we do, I just wanted to note that the CryptoLiveLeak blog is back and functional. So for all you guys watching right now, why don't you just go visit CryptoLiveLeak.org. Check out our website. You can sign up, become a user, and you can start posting blog posts yourself. And you can actually earn our reward token for doing so. We also have a swag store, and the reason I mention this is because we have a really cool Tezos till I Bezos, or how do you say this here? Tezos till I Bezos shirt, which is sort of an underground slogan for you Tez heads out there. So go check out our swag shop and make a purchase if you can. Any purchase helps the show. So now that we got that out of the way, let's introduce our guest a little bit in more detail here. So coming to us from all over the globe, first we're going to start with Phil. Phil is, again, the face behind Hayek Lab. It's a staking service solution for Tezos investors. The website is hayeklab.com. Phil is also the author of the Book of Satoshi, and he's working on a Tezos book. And one last thing to note on Phil, he has also started a project where he records the Tezos block hash on Bitcoin's blockchain. So, Phil, welcome to the show. I want a little bit of background from your word. Just introduce yourself to the audience if they don't know you, if my introduction wasn't enough, and some information on your projects.
Yeah. Well, I started, my interest is a little bit funny. How short do I need to be? I just want to make sure.
It's up to you. I mean, less than 3 minutes if you can.
Yeah, good. All right. So I just got introduced into the world of investment when I was maybe in the early 2000, I think, and it was a book from Robert Kiyosaki. And that led me to the Austrian School of Economy and eventually to the crypto world. And so I was just fascinated with this. And so I jumped into that. And basically, I was so curious about just what Satoshi had to say about it. So I actually decided to go through all of his writings. And I realized I'm probably not going to be the only one interested to know the early history, because I looked at that was 2014 and it was just like 2012, sorry. And he just left up something like 2 years earlier. And already I saw it a little bit of as a touch of history. And I would say, well, it'll be definitely a big piece of history later on. I mean, he's just vanishing like that. And so it's the book of Satoshi is really to make a hint to the religious aspect of it, but from a perspective of the financial world. He delivered us from the bankers, So that's it.
Excellent. Well, we appreciate your intro, Phil, and pleasure to have you here. We also have Kevin Mehrabi, who is the founder of StableTech. Can you kind of tell us a little bit about your background? How did you get involved with Tezos? And we obviously appreciate you being on the show today.
Yeah, thank you so much. Glad to be here. So my background is I'm founder of StableTech. StableTech is owned by the Tezos Stablecoin Foundation, which is a non-shareholder foundation, and I'm not a part of in that regard. And through StableTech, we coordinate these projects with my company, which is WealthChain, CryptoEconomic, which is very big in the Tezos community, creators of Galleon Wallet, Conseil.js, many other innovations for the Tezos ecosystem. TokenSoft, and which many people know as the compliance KYC platform that we all went through for the activations, those of us who went through the crowd sale activations for those tokens, and others coming in as well. Also, Draper Goren Holm is the lead investor on the project for StableTech and for Tezos Stablecoin Foundation. So what we do is we're building the primary layer of the layer one, I guess you could say, of the DeFi apparatus for Tezos. So DeFi is it's markets. It's all kinds of markets, trading around, that kind of thing. But stablecoins are where it starts. So that's the base, that's the rock on which everything is built. Really, it's two things. It's the native currency and the native assets you have, which we all know from Tezos baking. And then it's the stablecoins, which is the counter asset. And on top of that, we're developing tools for trading through Tezxx, which is going to be, it's very cool. It's coming out this month. If you saw the Tezos India Fellowship headline about TrueSwap, in which you could make swaps between ERC tokens and FA tokens, it's that same technology and the same person who's working on the project now to bring it out, hopefully by the end of this month. I'm pretty confident. He's pretty confident that by the end of this month we'll have it. As well as many other stable coins coming in. USDtz has been around since May. It's been trading and growing since Dexter launched back September 30th. And EtherTez, that's the big announcement that's coming out. We launched that. We launched EtherTez, the contract, a couple days ago. So it'll take another few days for the ETHTZ coin to start trading in Dexter pools, in QuickSwap pools when QuickSwap comes out, and to be facilitated listed in all of the wallets and block explorers. So you can look forward to that. That's coming. And then the big project for 2021 and Q1 2021 is when we expect the beta to be out, will be TezosFinance. Really, in some way, all of this is a culmination that's leading to TezosFinance, because that's the lending platform, which we believe will facilitate so much growth for the Tezos DeFi ecosystem, just by far, because people will be able to take the assets they don't want to necessarily spot trade, collateralize them, and be able to borrow another asset just on that collateral, and at the same time also earn for their lending. So that's really exciting. It's going to be like Compound or Aave, if you're familiar with the Ethereum DeFi platforms, lending platforms. So, you know, that's StableTech's work in a nutshell. But really bigger and long-term, outside of just building these projects, this is just, as I said, this is layer one. This is just the infrastructure to get things going. Tezos Stablecoin Foundation is another foundation aside from Tezos Foundation that's exclusively supportive of DeFi technologies and DeFi projects with core competency, resources, and expertise for DeFi. So if you're an entrepreneur who's interested in creating a DeFi project on Tezos, this will be there to support you, yeah, for years to come. So look forward to that. Yeah.
Awesome.
Yeah, that's really great, and I'm just so glad to have both of you guys here today. I mean, heavyweights in the Tezos community. Kevin, your products that you've developed are really part of the building blocks that are going to allow this community to flourish and to compete with the likes of the DeFi ecosystem on other chains out there. So I think everyone watching can't thank you enough. And for Phil, I'm really interested to gain your insights on some of the macroeconomic and Tezos-centric economic views later in the episode here. So that's just a little snippet of what topics we have coming down the line. But first, guys, I want to get your opinions. Kevin, we can start with you, of basically what are the major use cases on Tezos as it currently sits?
Well, right now and through now, we've had basically a very internal-looking community that was looking towards really baking and delegation and just getting that infrastructure going. And same thing with the governance platform and making sure that we have all the tools and apparatus to get Tezos in full gear. I think because we have on-chain governance, we have the luxury of time. So that's why we didn't necessarily have to rush token economy out there on day one or anything like that. But now that we have these new features being brought in, Z-saplings, being able to do private channel transactions, other innovations coming in from other blockchains like Tenderbake, we have that. So many more things being proposed and will innovate the community for years to come. We're going to have a lot of the innovations that we've seen on other platforms being done on Tezos, but being done better. I really think that they should be afraid of what this is capable of, because when you do have a united Tezos community, when you do have a united on-chain governance system, there's really just unlimited potential for what you can possibly achieve. Anything that's great on any other platform, any other use case that's been made successful will come to Tezos soon or eventually anyway. So right now, and where my area of expertise is DeFi, we've had a very limited DeFi field. On some level, that's a good thing for newcomers and people in Tezos just starting out with DeFi, because you don't have to be just kind of overwhelmed with a million different options of what's good, what to get in on. No, there's only 2 pools on Dexter. If you want to get in a liquidity pool, just choose one. It's not that complicated at this point. And then there's only one marketplace, and that is Dexter. There are a couple wallets out there that will facilitate DeFi trading. Like that's where it starts. I think we can take a lot we can start to look at the past models on Ethereum and see what they've done, look at the innovation and the trends over time, and that way we can just hit the ground running. Uniswap, for one thing, was a great innovation beyond the iterations of DEXs that we've had for years before Uniswap came in. So when Tyler of Camelcase came up with the idea of like, all right, let's do an exchange, he just started from the latest and greatest. He just started from Dexter and taking the best of that world. We didn't have to go through a million iterations. That saved us a lot of time and money and enabled us to just actually innovate on top of it, because we can start slim and nimble, which is also the benefit of being second mover. Yeah, I think the best is yet to come, of course. But 2021 will be a very exciting year where we'll finally start to see the true applications built on top of Tezos start to take form, and for everyone to use it and love it and tell their friends about it. And then we'll start to see maybe some migrations away from Ethereum and other alternatives onto Tezos as the last blockchain.
Perfect input of the slogan there, the last blockchain. And I love the insights. Thank you. So Phil, on that same question, what do you think is really the major use cases that currently exist on Tezos?
So, well, obviously the good points all have been raised, and we are really going into a new phase, into a discovery phase. It's going to happen not only for Ethereum, but also for cryptocurrencies that are just like Tezos are coming up with additional features. And we think that the landscape is pretty much mature, but actually we're just at the beginning of things. And we're probably just with the concept of, we see that JP Morgan and all that, is suddenly we have a big interest in companies to actually invest in Bitcoin. The next step will be to have tokenizations that's going to come up into a way more acceptance. At some point, you could think of the stock market is going to be completely revamped and now running over existing cryptocurrencies like Tezos. Imagine that. I mean, one of the things that is silly is that trades finish at 5 o'clock, 4:30 actually on Friday. That's not the case for cryptocurrencies. And why not? It should not be the same also for stock market. So if you have a company that decides to tokenize on Hayek Lab, on Tezos, if company decide to have a token on Tezos, then they will actually be able to have this traded during the weekend, and it really changed the landscape. Obviously, there's a lot of issues that is, you've got to talk about regulations and all that, but the more and more things are growing, more governments are getting soft into the aspect. They're not as targeting towards cryptocurrencies because it's getting too big now. It's really too big for those who are coming up with the idea that government's going to ban it and all that. And I hear that mostly from gold bugs, for those that are investing only on gold and silver. And so that is at this point, it's over. I mean, I don't see, there will be a revolution if there was something like that. And it's too big at this point. So at this point, you're actually looking into more integration into an adaptation of the current system towards adapting cryptocurrencies. It'll be fun.
Interesting. I just want to get your take on this, Phil. I read some article that came across my feed earlier this week that there was some proposal on the table in the US that would not allow for individuals to custody their crypto assets. And maybe I'm misreading this, but I think the purpose was designed so that banks had to custody crypto assets. You couldn't hold a wallet on your own. What do you think that would do to the cryptocurrency ecosystem in holistic?
So I actually, that is from a München. I have a hard time pronouncing his name. München. He came up, or I'm not sure if it's directly or someone who heard him saying those things. I'm not sure how official this, but he's supposedly thinking about this kind of thing. I just tweeted, it's like, okay, only in the land of the free and home of the brave. I mean, it's ridiculous. You're talking about, this country, think of a country a small country in somewhere in the world. They don't even talk about this kind of thing. It's only these strong regulations always coming from a Wall Street base, government based US that is very influenced by Wall Street. I find it sad. And is it going to be going? Is it just a poking, figuring out? Okay, let's run that, see how things happen, how people react to this. I have no clue. Or is it to have another incentive? I have no idea. But okay, so to answer your question, what do I think will happen? I think it's going to backfire. I don't think. This will, the U.S. government in the 1930s, under FDR, they banned Americans from owning gold. And what people don't know is actually a lot of people did not return their gold, even though you had the $10,000 fine, which was enormous at the time, and even maybe a threat of prison. You still had a lot of people that simply did not return their gold. So that is, you were forced to return them to the bank. So it really is a similarities to this thing. Obviously, it changed things, but if other country, you will have to have that across the world, to really make an effect on that.
Interesting. And I just want to touch on this point real quick. Do you feel like the genie is already out of the bottle? Like there's no kind of putting this back in from a government standpoint? This is kind of an open question for both of you. I'd be curious to hear your insights.
I think to touch on the point of is this just a feeler to see how people react to things? I think it's a mix of both. They don't want to be too lenient because then it's, they have to be aware of what's going on. They have to have some sense of framework, just like they always had with internet. But really, even with internet regulation, the example I like to use is Amazon didn't have a sales tax until 2009, I think it was, which is pretty late. It's pretty, they already took a lot of dominance and a lot of change until that point. And even still today, I don't think every state has, you don't have to have a sales tax when you shop Amazon at every state. I think it's 40 something, but yeah, so, and the reason for that is the government wanted the US to lead the way when it came to internet technology. They didn't want to stymie it by loading it up with a million regulations at first, because then everyone would just move to some other country, or some other country would become the main headquarters for anything internet new and novel. And I think the same concern has arisen even since the start of and growth of Bitcoin. The concern was that, China mining, governments centralized mining, that kind of stuff, controlling the wealth. If it's all of our wealth and they control the hull of power, we can't let that happen. And then smart contracts. If the whole world's going to be run by smart contracts, we don't want to push that out of here. That's just giving up all of the advantages of industry and infrastructure that we've worked so hard to have and have been kept working hard to grow and maintain. So I think it's going to be that. I think regulators are, because of that and having grown up in the internet generation, many lawmakers now can see that, okay, let's be really smart about this. Let's not just be very sudden and start to put out laws. There were a lot of weird proposals in the 90s. People didn't really understand internet or technology that lawmakers were just proposing. Bills that didn't pass, but there's a whole history of that. It's just kind of weird. So they're taking their time, they're learning, they're talking to people in the actual world of entrepreneurship and development to understand what is this, what can we do with it, how can it comply with our laws, how can our laws going forward comply with this, keep everybody safe, make sure that we're not just giving shielding to criminality or stuff that you rely on the government to protect us from. And then after that, don't stop people from innovating. Don't stop industry from growing. This is an advantage. This is something we can that we can't miss out on. So I'm confident in that the lawmakers are forward thinking in that regard. And we should take any proposal and pitch seriously, like especially the Stable Act, because it's not the last time the Stable Act will be proposed. But I say it that way because we're in a lame duck session of Congress, and obviously the things that are put out right now, they're not that serious about it. They didn't give ample time for any kind of discussion, or let alone to go to for any kind of debate publicly, or to go to or even to get to the Senate. No, there are a lot of bills coming out this month. They put them out so they can make a statement, and they can die by the end of when Congress adjourns for the holidays and constitutionally becomes dead. Otherwise, why do it? Why do it now? It doesn't make any sense. But it's good. It's good to look at it. It's good to read it. There are a lot of changes there. Arthur pointed out that it specifically targets robocoins, which actually, having been in the stablecoin thing for a while now, those robocoins were considered to be, oh, well, that's gonna, if you have a robocoin that's based on crypto collateral, not on fiat collateral, then that's decentralized and no one can stop anything. It's like, no. They're like Congress was saying basically with this in the bill, saying, no, we're not dumb. We know what you're doing. It's not gonna. It doesn't make a difference. Come on. We'll regulate it. We'll make it fair. But come on, let's not act like this is a different thing altogether. It's for the same purpose and the same use case. So
and you're right, Kevin. Actually, the 90s, you had export restriction on the cryptocurrency code.
So, yeah, I mean, there's some great points you guys brought up. And I think for our audience listening, maybe the best thing for you to do is to go to your local meetup, go to your local virtual meetup now that everything's virtual, and maybe see if they're crafting some kind of response to regulators and participate in that response. I know this is something we've done here in Boston before, and it proved quite fruitful to have that sort of dialogue with the regulators so they know exactly what we need in order to keep innovating. So we'll leave that topic at that, and we'll continue forward here.
Good deal. And while we're kind of on this topic of stable coins, I do want to touch on USDtz. And this one's for both of you guys. I would love to hear your opinions on this. What is the biggest difference between a Tezos-based stablecoin versus, let's say, a multi-collateral coin like DAI? And why should the community start kind of getting involved with this? And I know with the evolution of Dexter, I'd be curious to see what are your thoughts about the UI, some of the volume trading pairs, that kind of stuff in regards to Dexter, and then if you could touch on the USDtz and what that may look like moving forward.
Sure. So with USDtz, and going by the symbol USDtz, there are many ways to do a stablecoin, but really there are only two ways. You can take basis and their weird thing as an exception, but so you have the fiat-backed stablecoins like Tether and USDC, Pax, Gemini, and that's hard collateral. You're supposed to be able to redeem that for $1 or some kind of dollar equivalent that you can just take to the bank, and that's good. The other kinds of coins like DAI, DAI is more like, it's a stable coin, but it's also a lending system. On some level, it's not quite the stable coin because it thrives on volatility. The change of price of DAI is what makes it attractive for participants to take in and cash out on collateralized debt positions so that they could borrow the DAI and then do DeFi stuff with it. There's nothing wrong with that. That's great. That's actually very important. And the economy of that very much supports and is responsible for a lot of the growth of Tether, of USDC. And likewise, the other way around too, USDC and Tether have been, and the success of those have made DAI a very possible financial ecosystem as well. Because those who put money in, they need to be able to move their money around into different positions. Some of the top volume pools on Uniswap are between stablecoin and stablecoin. if people need to diversify their stablecoin portfolio, they need to diversify any kind of portfolio. And that actually, I mean, inherent in the name stable coin, I mean, it's to have stability. Diversification brings more stability. So it's pretty clear to see why that's so attractive. So on Tezos now, the one that we started, USDtz, is fiat backed. And we had the luxury of saying, actually the very beginning, I thought, okay, so should we fill a fiat accounts and have all that like they did with Tether and USDC? But then we realized, no, that's ridiculous, because we already have USDC and these others that have done that. And some of those, not Tether, but USDC, FDIC insured, it's got all the licenses, it's a limited trust operating out of New York. And it's very close to, fiat in many respects. I feel very comfortable with USDC more than anything else. So we decided, okay, let's accept that as the collateral. It's the same thing, you can redeem it just the same way. They didn't have that luxury, because at that point you have to get fiat into the system. You have to create those reserves for that collateral. Not to say that we wouldn't do a actual fiat in the future. Probably will eventually once we get to a point of scale. But there are ways to get going that are a bit different. And then with Arthur's side of things, Checkers, and that system that he's been working on for over a year now. And the other one, Calibri, that's coming out from Luke. These are other things in that RoboCoin space that algorithmically backed, collateralized by other crypto, not other crypto stablecoin, but like XTZ. And through that, you're basically making long and short positions on the price of XTZ versus this alternative asset that you would collateralize that underlying asset, the XTZ, and take out this US dollar form as a type of lending. So that's oversimplifying it. There are different versions of that, and there are many different ways to do it, but ultimately it comes down to that, because the value has to be placed on something. So if it makes it a bit more volatile. You can understand why, because if the price of the underlying asset just crashes, even if it's just for that day, then there's the risk of like, well, we can't say it's fully backed. We can't say it's pegged to the dollar, because it would lose its peg. So you say, well, okay, you can take out a certain amount of money for this, like a ratio of maybe like 50% or a third of the value of the XTZ you put in. That way, if the underlying collateral crashes, you still, it's not going to lose its value, because in theory we could liquidate that and have a full value for the US dollar thing that you can borrow out, the DAI or whatever. But then there's still risk, and also again, it's a competitive market, so it's definitely much more participatory than USDtz, these types of models. USDtz is there to be that backbone that you can always count on. Okay, it'll always be backed by a dollar. Play the markets, play whatever the hell stablecoins you want, whatever. But when you need some cold water over the thing, here's the USDtz. So and all of these backed stablecoins from the StableTech family. And if you want to see all the stablecoins we're doing, not just USDtz and ETHtz, you can go to StableTech.com. It's a play on words, because Tez is the currency of Tezos, stablecoin, StableTech, that kind of thing. All right.
Very good.
And how about Phil? I'd like to get some of your commentary on Dexter and how you see maybe the volume, the trading pairs that are currently listed on it, the liquidity pool action that's happening, the total liquidity, total value locked is somewhere around 800,000, I think last I checked. Compared to Uniswap, we're talking about over $1 billion in locked collaterals, right? In these, or liquidity in these liquidity pools. So obviously Dexter is a very early stage compared to like a Uniswap, but so far, what do you think? What kind of job have they done in your mind?
Well, both are running on the same principle. I'm not sure how much the people who are listening know how Uniswap and Dexter works, but the principle is really based on the price is set based on the amount in the pool. And so therefore it will adjust the price strictly through arbitrage, while you will have, and if you go on Kraken and you have a difference in price between Kraken and Coinbase because of an event, typically the buy and sell order might adjust automatically, and no one actually can benefit from arbitrage if they're fast enough. It's only when there's any kind of lag. So that's a big key difference in this role. How things will evolve in that direction, if it's going to be, I mean, I found this very, very peculiar and interesting to see how Uniswap and Dexter works as opposed to the traditional market. And we'll see how it goes. But so far, it's quite fascinating as a different approach. And you would have mentioned that to someone just 10 years or 5 years ago, their head will have spun, you know. So we're really constantly into improvements and amelioration and improvements. And I'm not sure what else is going to come up. But so far, it's just fascinating. Now, yes, just as you pointed out, Dexter has a small, although in terms of Uniswap, what they do have is obviously per pool, some coins have very little in their pool, while some others is pretty heavy. And so you have the difference behavior. The bigger the pool, the better the amount that you can actually trade without being penalized. And that is the key to remember as a difference. And so it'll be good to see higher volume, more in the bound pool, and I think that comes with maturity.
Absolutely, and I think it's an interesting note there that you said the higher amount deposited in these pools will lead to less of a penalty. Penalty being the slippage that you have to pay essentially to transact larger volume, right? So there's some inefficiencies, but with more liquidity in those liquidity pools, you're able to transact larger orders with the DEX.
Yeah, well, actually, this is similar to if you go to if you want to trade and I want to buy, 10,000 Bitcoin, and you go to an exchange that has very little volume, it's going to take you a month if you want to acquire without jumping up the price too much. You just, slowly make purchase by limit orders slowly. And while if it's a real huge volume, you can come up with buying that 10,000 Bitcoin in a matter of an hour or two if it's heavy volume traded place. I'm coming up with 10,000 Bitcoin. I just don't know. But the point is, it depends. You've got the same similarity as for a pool as for an exchange where there's a lot of volume.
Yeah, and so for all the audience watching, I just want to remind you guys, ask questions. Whatever you type in the chat, we can bring it up here. I see a hello to Kryptonio, Tezonian number 22. What's up? How you doing? We got some enlightening commentary from Shiggy_CZ When Moon. Come on, guys. We can do better than that. And then we have Baking Benjamins, who's really excited about the ETH announcement. So come on, guys. If you have any other questions?
I can tell you. It's December 2nd, 2023.
Okay, we have a date. When moon?
I'm not going to define what moon. I'm not going to define what moon is.
It is interesting though that many people don't, because I'm always watching Dexter and the price and the market price. It's like I think people have gotten better at like spotting the arbitrage and profiting from it. But it's surprising how many people are aware of Dexter, but they just let the opportunity slip by, and to see just like the amount of time that can go by. Part of that could be solved simply by maybe an alert bot or whatever, but it's like, just like as a PSA, guys, it's free money. It's like free Tez that we're not, like you can, even if you just want to flip it, it's like, okay, the price of Tez is maybe lower on Dexter. Okay, then just buy it up there. It's for a cheaper price. Then take that Tez, go to Binance or whatever, sell it for more than you put in, and then you'll have a little bit of profit. And it's a good thing. I remember I was explaining this to people who were like new to Uniswap, Dexter type trading, and they didn't want to do it because they thought that like it was wrong. And I was explaining, no, you're supposed to do that. That's how it stays balanced. It does it until the price is balanced. You're supposed to make money off it. That's the point. But it's just like, no, because it's not the right price. I shouldn't be doing. No, do it. That's the point. Yeah.
Otherwise, the price is going to stay at that level.
Yeah, and you can do it both ways. I mean, if you
So,
buy,
Evan, actually, just to let you know, I'm aware of a company that is doing this on Uniswap. They actually have active robot, and that are strictly doing arbitrage constantly for those for a certain set of crypto pair on Uniswap. And I was interested in doing this for Dexter, actually.
Quick comment from the audience here. Kryptonio has made around 400 Tez by minting USDtz, buying Tez on Dexter, then selling it at Kraken while keeping the difference from arbitrage. Yeah. So, guys, there is free money out there. There is such a thing as a free bunch.
So, yeah, I mean, that's the thing. We were just looking at, I was talking with my partner about that, having a bot that will be just actively doing this.
Yeah, I think I think that's eventually going to be the case anyway. Like somebody's or multiple people probably are going to make bots to run and just make the trades too. I think it's great though to involve the community so the community can make money at first, because it
that's good for
agency. Well, it devolves a sense of agency that's decentralized, and then those people get excited about it. Dexter becomes like what they just go to trade, not just to make money, but just to trade. They can bring more people in, and then that makes Dexter bigger, which brings in larger liquidity pools and more trading volume. And then the bots when they do come in, are ultimately happier because they get more money to make. Yeah. It takes everything. But yeah, so I mean, yeah, this is a great time now before the bots come in to make a lot of money.
But actually, there's another point positive about that is once Dexter follows the price that you have on other exchanges, then you do not need those automatic, what they're called again, outsiders that are actually inserting. Soon for smart contracts, they'll be able to rely on Dexter knowingly that it tracks pretty much accurately what is going on in the exchanges.
Yeah, the case was true.
Oracle, that's Oracle is the name. So you won't need an Oracle that is fed by external thing. You're just going to be able to rely on what is going on the blockchain with Dexter's contract, knowing that it reflects pretty much.
Yeah, it wasn't until I think late spring that Uniswap, until then, it was still like everyone would say the same thing about it. I would say the same thing. It's like, oh yeah, it's good for like small trades. But after that, I mean, the slippage is so much, you got to go to like a centralized exchange. After that, it just started to grow momentum and the liquidity pools became large enough that it's like there are very few instances for most pairs that like I need to go somewhere else. Sometimes, well, for liquidity in particular, I'd go to Curve.fi, I go to Curve Finance because maybe the slippage is significantly different. That might change though one day, but when you optimize for stable coins, that's another path to take. So there is more innovation to come down the line. It's not like, here's like the Google of trading and therefore you don't ever need anything else for any reason ever. No, everything has its place. Sometimes you want to be the Google of something. Sometimes you want to be specialized for a very specific type of set of data. Or set of coin. So there is that too. And then when QuickSwap comes out, I think that'll be also help balance the price out a lot more, because then you'll have a second market directly to just bring it to whatever you buy, and then even if neither price is balanced, like one will be more balanced than the other. So and eventually it'll be so competitive that they'll bring in. But yeah, and I like what you said about the oracles, because oracles really. They only really matter so much because people are kind of confused, when do we use them? They matter at the point in which there are sources of trading data that would dictate a price that's decentralized and not manipulated. So to keep it not manipulated. But if the volume is low enough, or well, if the landscape of the particular asset you're trying to get the oracle reading for is not that, the price isn't moved by such decentralized forces, then an oracle, even if it's the best, most perfect oracle ever, it's not going to help, because the whole point is to keep the price from being manipulated. And if the price can be manipulated, then it defeats the purpose. So we're getting there with Tezos. We're getting close. Volume is a lot higher. Volume is very strong. It's getting stronger. I think it'll keep getting stronger. And then we'll get to the point where the decentralized price, the theoretical communal price that everybody agrees on, is just so insurmountable that a single whale, no matter how big they are, or a cluster of them, can't tilt the price to that effect. And then oracles will be great, particularly for centralized exchanges. For decentralized exchanges, it'll always just be the people being the oracle effectively.
Tezos Bakers and their delegators are really happy with all those new fees. So thank you.
Yeah.
Guys, your commentary has been excellent so far. We have some really good questions from the audience I'm about to ask here as well. But before we do that, I just want to remind anyone that may be a new viewer right now to go over and visit CryptoLiveLeak.org. All right, this is a user blog where anyone can sign up and register. They can even start earning cryptocurrency by posting and interacting with the website. We also have our swag store here, which features some Tezos merch. So the Tezos Till I Bezos shirt is very popular. If you guys want to come over here, check it out. All proceeds from what you purchase here help support what we're doing here with the show. So please, this is us asking to help pay the bills. Go ahead and purchase some swag, guys. But yeah, let's get back into the commentary. So we have a good comment here from Ross A. It's addressed to both Kevin and Phil, and it's about the upcoming Ito protocol with sapling privacy features. What kind of thoughts do you guys have on Tezos integrating sapling? And with the next Ito protocol, basically, what do you think this is going to enable Tezos to do?
Well, for one thing, regarding sapling privacy, we're already in talks with Bolt Labs about integrating that for USDtz and the whole StableTech suite. So to apply it to dApps and for tokens, I think that'll be particularly great because you can choose different denominations given what area of business or who you're dealing with. So that'll be great. Yeah, and then tickets I'm looking more into. That's exciting. But so that we've been talking about saplings for a long time, and then the tickets thing came up, and then so we'll get more into that. But I think that'll definitely help data logistics as well. So I definitely, especially with Delphi and with Ito coming up, or we're through it now. It's going faster and faster, and just a testament to how on-chain governance works and gets better and stronger as an organism. That we're getting to the point where these features are very, like, you can just immediately imagine the possibilities for dApps, and then those use cases become that much more apparent, not just for these features, but for Tezos overall. So now you have something to write home about and tell your friends and say, oh, we got this on Tezos. It's like, oh, what about Zcash? It's like, what do you need Zcash for? You got the same privacy features on Tezos. And then I like that because as an example, it really underscores the case that's made about how like everything will all the great features of other blockchains can ultimately be absorbed into Tezos. So that's a really exciting aspect of it. That's one of the things that I realized very early on, even just reading the white paper. It's like, oh my God, so this will just have the best of everything. We won't need other stuff. And they stay united as an ecosystem. It's not one team. It's people from everywhere, teams and teams and teams coming together and democratically pitching and working out solutions. Like, this is incredible. So yeah, so there's that.
Awesome.
Yeah, I imagine that the smart contracts integrating this technology, you could have, well, your will integrated into a smart contract with a deadman switch. And so nobody knows who's going to inherit your thousands of Tezos or millions of Tezos until that contract is executed and all that. I mean, it's just a little bit of a silly example, but I'm just bringing up a point of the aspect of having all those contracts with the ability to hide content is another feature that we'll probably see things we have not thought about yet.
Yeah.
So, sorry, Benton. Before we move on to the next topic, I just want to address some of these questions from the audience here. It looks like these are directed to Kevin here. So bring up the first one here. This is from Sergio. Thank you for the question, Sergio. So will USDtz be available in Atomics?
That's a question for Atomics. I know that they did tell me they had a grant for Tether to integrate Tether. This is before USDtz came out. So I think that was their USD solution, and since then they had moved on to other things. They said they're doing something now where like it can just be open for other tokens to be brought in. So yeah, I don't know anything else on that. You got to ask those guys. But Baking Bad has been like really great for all these projects. I mean, Baking Bad, or Better Call Dev, Explorer. That's where I go to see analytics for the smart contracts for tokens for Dexter. That's really great. I mean, they're definitely spearheading so much that's we can be thankful for everyone in the Tezos DeFi ecosystem going forward. It'd be great to see some of these coins on Atomics. I think it'll happen eventually, but you have to see what their schedule is.
And how about this question here for Kryptonio? Do you think that the analytics that Dexter plans on adding will bring in more liquidity? They feel that people will be more incentivized when watching their rewards coming in. They can visualize it. What are your thoughts?
I think that'll definitely help. Yeah, it's very early with Dexter. I mean, they did something nobody's done before on Tezos. So I think they've done a great job on keeping a very slim, minimalist model for the initial launch, getting the feedback. You know, there are many changes that I've just been like hounding Tyler about. So thankful for Tyler for bearing with me. Yeah, and the feedback has been great, and I think the DeFi community is doing a great job of speaking to all the things that are needed, looking at other systems and seeing what are being done on those platforms and what can be done on Tezos. That's part of the great advantage that we have as the Tezos community right now. So yeah, that'll be interesting. There are other things that will bring in more liquidity. Where liquidity, if for nothing else, where it really people have the most incentive that I've noticed, like it just, and in that sense, like what people minting more USDtz. And by the way, most USDtz is locked in Dexter USDtz XDZ pool right now. So that's the first thing. So if and when this has happened in the past, the price of Tez just jumps, and then there's arbitrage, but you need USDtz to buy it. But all that USDtz, most of it is in the pool. And then so maybe you have a little bit, but how are you going to get up to that? How are you going to, that's a lot of easy, cheap Tez you can buy. So you have to mint. You have to go to the minters. And then so a lot of people notice that. They all start minting at the same time, and then it's a rush to see who can get it first and get it to the exchange and then buy all that cheap Tez. So that becomes competitive. I think people are realizing it's good to have USDtz on hand for that purpose, if for nothing else. And then also, there are plenty of others. For everyone who adds to liquidity pool, there's like 100 people watching them to see how they like it and if it works well. Just because someone's, we're all early movers. If you're watching this, you're an early adopter. That's what you are. But that doesn't mean we're all a monolith. Some people are the early adopters, and some people are just like, well, you dip your toe into the pool first and then tell me what the temperature is. Like there are those people, right? So, which is fine. I mean, that's great. That's all part of it. Everybody needs validation like that. So yeah, the growth has been great. I think if you look at, and this is to be expected, you look at a Uniswap in its first couple of months, Dexter has been outperforming Uniswap's first couple of months when they started out. Of course, you could say, well, that's because the DeFi world is bigger now. There's more money locked in DeFi. People are more accustomed to this, and we're just overall more involved in crypto. There's just more money out there. Well, yeah, but that's why it's an advantage that we are where we are right now. There are a lot of low-hanging fruits out there, and it's easy to ramp up and a lot quicker to scale than these things we've seen on Ethereum DeFi. So I think liquidity should not, especially in the sense that we do it, if you oversupply liquidity, it takes away from a lot of that agency I was talking about. I think TZBTC, you could see it with that. I mean, Wharton came in February, and they minted 352 of the 357 some TZBTC that were out there, and most of it, I think today still sits in that wallet. And so it's provided a lot of liquidity that can be used, and definitely helped the get-go with Dexter. But also it's like, well, there's also something to be said about controlling the supply by not controlling it, just letting the free market control it, by letting the free market decide when they want to mint, when they want to grow it, and finding opportunity and scaling on that level. So I think, so we're very happy with the pace that it's growing. It's definitely the liquidity growth has been escalating and at a much quicker rate. In particular, It's just amazing considering there's only one marketplace. And to add another, it's not even just like it doubles it. It's the fact that those two marketplaces interact with each other. It just makes it exponentially more appetizing. Then we have Tezxx that's coming in. Buying from a mintery, I think, is a point of friction in that a person needs to interact with a human being. Even though it's all electronic, Tezxx Bridge, when it comes out this month, I think will alleviate a lot of that. It'll be an automated system that will involve inter-blockchain atomic swaps. So that's the true swap system that came out of the Tezos India Fellowship. So we're excited about that. I think that's going to be one of the big game changers. So a lot of game changers coming up. QuickSwap is one, Tezxx Bridge is another, TezFin will be another one for lending that comes out, and definitely the diversified marketplace. But for given the limited amount of support infrastructure now, things have been going pretty well. And even with volume, even a bad day is a good day now. My standards for what I expect to see on a day-to-day volume level of trading have definitely increased over time, because the bar has been getting higher as more people are participating and more transaction activity has been coming in. So that's great.
Awesome. So I do want to touch on a few things. So I have a couple questions, and I want to direct these towards Phil. What is some of the biggest hurdles for Tezos DeFi in regards to scaling up and ramping up to the same level as ETH? And then second question to follow up there is, what are you seeing from a macroeconomic standpoint in regards to cryptocurrencies and their evolution here in the next couple of years?
Well, I think I'm going to let Kevin on the first one.
Okay.
I'll let him first answer that one. I can jump on the second part.
Okay.
Go ahead, Kevin.
Say the question again.
So the first question was, what are some of the biggest hurdles that you envisioned for the Tezos DeFi ecosystem to kind of ramp up to have scalability?
This is a very new area. It's hard. I'd like to think of a past model or analogy of where you had a new smart contract protocol come in that's better and take an industry that's thriving on the previous one and then supplant it effectively. But we don't have that. This is the first time it's happening. So that's kind of what makes it exciting too. The hurdles that I anticipate, I think there are a lot of people who are very, there are those who are defensive about their own platform that they're used to. People like what they know. They get very threatened by something that says, "Hey, let's overhaul stuff. Let's start anew. Here's a thing that's better." For no good reason necessarily either, but other than that it's new from what they know. However, that will actually translate into a good thing. I am very thankful and very happy whenever I see people criticizing Tezos, because it shows that they you're not doing it. I put this in a tweet and I realized that the double negative confused people. They're not doing it because they don't feel threatened by it. They're doing it because they do feel threatened by it, right? Otherwise, why would you criticize? Why is it even worth your time? Who cares? There are plenty of things I don't think are worth my time, and therefore I don't talk about them. So be happy whenever that happens. So that'll be something. I think some might say, oh, well, they have this large network now. They have a lot of money on it already on Ethereum, but it's really small in the scope of things. 15 billion total value locked, that's impressive, but it's not going to seem very impressive maybe a year from now or 2 years from now. So we're all kind of starting at the same place. It just looks like there's a lot of difference because we have a very myopic view. We're only looking at two things. When you look at only two things, you're going to see, as identical as they are in many ways, in terms of the essentials that everybody needs to have, the requisite features, you're going to see a million different contrasts. And at this point, because they started a few years earlier, it's a little bit more obvious where they are. To me, that's opportunity, because that just means there's a lot of low-hanging fruit that we can bring onto Tezos and do it better, which is what we're all about. The other thing which we hope to solve, and we will solve with Tezos Stablecoin Foundation, is the devout support structure for Tezos DeFi projects. So through grants, resources, and all these opportunities, having having a Tezos Foundation that's a different Tezos Foundation from the Tezos Foundation is going to provide that for all the aspiring entrepreneurs and developers that want to come into the system. Whereas Tezos Foundation is a bit more overarching. It's about, this is a technology project. Tezos has this open source technology project. It's not specifically for finance, even though that is one of the things, but they are balanced in that regard. So there's something to be said about bringing in DeFi as a core competency of an organization in grants offerings, in people and resources. So I think that'll be a big game changer, and probably other blockchain platforms will look at that and think maybe we should have a DeFi specific foundation that runs in parallel to the main foundation that we have. I think that might be kind of difficult for them though, because they don't have the united on-chain governance that we do. We can do this kind of stuff, have these type multiple organizations, multiple foundations, just like we can do so many other things, because we know we're going to be united in the end, because we know that it's not like there are going to be a million Tezos. It's all Tezos. It's all connected. It's all one united family in proposals and voting. Like that's the spirit of it. That's the ideology of it, and that's been the proof of matter that we've been bringing forward from proposal from upgrade to upgrade. That's been happening, and every time we do it, it's just reinforcing of that underlying ideology. So I think we're good.
Yeah,
I think it's great to have more than one foundation, because it's also echo into the decentralization aspect.
good.
And Phil, again, just to have your view on the macroeconomic perspective of the cryptocurrency markets in general right now. We have Bitcoin approaching its all-time high of 20,000. Can you give us a little bit of your temperature on the market right now?
Yeah, well, one of the guy I recommend you follow is I think it's 100 trillion USD or something like that is the handle on Twitter. He's got the stock to flow, and so he's talking about it. The focus is on Bitcoin with this guy, but basically he's expecting somewhere between $100,000 to $200,000 per Bitcoin by December next year, based on the behavior, the stock to flow. And he's got a chart where he's comparing the rate of inflation of different assets on the log scale. And he put that real estate, gold, silver, diamonds, you name it. And they all follow this straight line. And real estate is at the very end of the line. And you see that Bitcoin, with this move up and down, basically with the halving, has followed roughly this straight line. And so far, it's showing that it's about to do a move up to catch up with that line. And so the next 12 months will be very, very interesting. The side effect of that is that it brings new blood into Bitcoin. The price movement attracts new highs, and then you've got new people. And the very first thing they'll do is invest in Bitcoin. Most of them, I mean, there's exception to that, where some guy will say,
Hey guys, looks like we just lost Phil there. The connection was a bit shoddy, but if he joins back in, we'll bring him back up. So that, I think he makes some great points there. Being that we have him back.
Still there or not?
Phil, we got you back. Go ahead, continue.
Yeah, okay. It's just I got to flip. So I'm not sure how much I missed. So for the majority will be going to Bitcoin first, and then they'll look at the landscape, and they'll be attracted to the other cryptocurrencies, including Tezos. So you'll have a lag, and I find it similar in some way to the gold and silver. At some point, gold starts to move up, and then silver. And silver is a tiny, tiny market. So whatever gold gain, it'll be a factor of 10 for silver compared to gold. And so if gold doubles, or there's a factor of 10 for gold, there'll be a factor of 100 for silver. And that's the same happens with Bitcoin. What's going to happen is a lot of altcoin is going to catch up. The market is so tiny for other altcoin that it doesn't take much. And now you combine that this year, 2021, with what is going on Just a little bit of a reminder that in September 2019, we had the repo market going into hiccup last year, a year and 3 months ago, where they had to do emergency stuff, the Federal Reserve, and that kind of thing is the same kind of echo of 2008. The COVID story just put a dent in the story where suddenly the story is a little bit different than in 2008 because it created a deflationary aspect from all the lockdowns and all that. So, and obviously with that, they have the ability to, to have all the excuse to print on a different, people are not going to revolt this time. And so you've got an amount of debt that has been going on. And right now, it's so much that for every dollar of debt that is being added, we only get about 20 cents of GDP growth. The system is completely sick, and it's a game over. It's just a matter of having a real currency crisis, and I'm thinking 2021 might be the year where we see serious side effect that will start to pop up, or even a real crisis. I'm not sure when the crisis is going to come up, if it's 21, 22, or 23, but it's most likely going to be the COVID stuff has accelerated everything. I mean, the amount of debt that suddenly we're talking about trillions moving up, and nobody's barking about the federal government debt. It's suddenly we don't care anymore because we have a much major crisis. But at some point, or even if we start to reopen, it'll much more. I mean, it's going to create some major inflation, and that will push up all Bitcoin. You've got already that scenario about Bitcoin, what I mentioned. Then you add up with the story. So we might see things even more crazy in 2021.
Yeah, always some great perspective from Phil. And if you guys don't know his handle on Twitter, I believe it's egg_descrambler. He always provides great investment insight, gold, silver, real estate, property, and of course, cryptocurrencies. Please give Phil a follow. Also at Hayek Lab. So we're going to get to one more audience question, and then we're going to finish with like kind of a fun question for you guys. You can choose to answer or not. But this is a serious question here coming from Baking Benjamins, and it is directed to Kevin. And it is regarding the announcement, the big major announcement that you released on today's episode. So please tell us a little bit more about USDtz and how it interacts with the Ethereum blockchain.
Yeah, it's very simple. Ethereum, Ether, the native currency of Ethereum, that's collateralized, and the USDtz is pegged to that. So very similar to what we do with USDC with USDtz. So you'll be able to interact and trade with USDtz on Tezos trading markets like Dexter, like QuickSwap, and not have to incur the fees of doing it on Ethereum itself. That in particular is something very attractive to Ethereum traders, Ethereum DeFi people, because even if you love Ethereum and hate Tezos, look, if the price of gas goes up for Ethereum trades, the price is going up. No matter how much you love Ethereum, it's not going to change, even if it's just for a weekend, even if it's just for like a day or something. But you still want to keep trading. That's what you do. Some people do this full time. So this is a proxy, a way to do it on another blockchain, have ridiculously low fees to the point that they're just not even, like, it's too cheap to meter for a lot of people. And at that point, you have this very scarce resource at that time, and you get to trade it without all those fees. And I think what's going to happen is people are going to come in to USDtz just because, or coming to Tezos DeFi just because they have to on those cases, because it's just the weather will be really bad gas-wise on Ethereum. And
so just one point, I think the other question he was asking if there's any interaction with the Ethereum chain, and I don't believe so. But
nothing in that other than minting and redemption. The fact that something is collateralized, and you'll be able to see on the Ethereum wallet, here's where all the collateral is. It moves just the same, and there will always be enough in the reserve to match the amount of USDtz, ETH that's, I gotta get used to that, ETH that's minted. So yeah, But I think what's really great about to just finish the last point, because I think it definitely hones in on the great use case that's great for all of Tezos DeFi, is that when those instances occur and people come into Tezos DeFi because they have to, because the gas is just too high that day or whatever on Ethereum, yeah, when the gas price goes down, many will go back to Ethereum, and maybe they'll come back again whenever they need to. But some will stay. Some will say, you know what, this is not bad. Maybe I'll just keep my assets here, my stores of value on these stores of value, and then like that's enough for me. But then over time, that's not going to happen one time. That whole situation in which the gas prices go up there, it's going to keep happening. And then you'll have more and more people coming in and doing that, coming into Tezos DeFi ecosystem. And then every time, more and more stay. And then that just accumulates larger and larger. Eventually, there will be this tipping point in which we will take over. Not by that alone, but that will be a very significant part of it. That will be a very significant impetus for the migration away, the exodus from Ethereum DeFi to seeing Tezos DeFi as, okay, this is just better for DeFi. And then also that other question you asked, Baking Benjamins. Yes, I do drink from a measuring cup. This is my requisite Pyrex glass. You know, all the letters and numbers have worn off. It's just a normal glass now. But you know, well, I'm not trying to front. What do you want me to? You want me to there's some pen tablet that's all gold plated and jewel encrusted? No, the Pyrex. That's what I do.
Truly iconic, Mr. Kevin. All right, so let's wrap it up. We've been talking a little bit about trading, right? We're almost at the end of 2020. What an awful year it's been. But seeing as the timing lines up, we all pretty much think that we're going to see new highs in the crypto market here in 2021. So I want to hear your prediction, if you feel so that you can make these predictions, for the price of Tez, what it will max out in 2021. We can start with, all right, Kevin, go for it. Then we'll go to Phil, then we'll go to Benton, and then I'll make a final statement on this.
I think we'll see $10 at least in 2021. Maybe much more. Maybe that might be too shallow. But I think we'll at least see $10. Ultimately, I think there is that minimal line of support that comes from the bakers. We'll always bounce up and down from there. That's just a theory. But yeah, we tend to jump really high. When we go to bull run, it's like no joke. But it comes down just as quickly, so that's something to be cautious of. So be smart about it. Look at the markets for what they are. Look at good analysis, good math about it, not just what you want it to be. Don't let that drive your decisions. That's my advice.
Well, if you can go with the at least, well, I'll say it's at least $3, and I'm sure I'm gonna win. But no, seriously, I think we might be looking at somewhere between $20 and $40, somewhere in that range. We're talking about a factor of 10 from where we are now, and I think we're going to see a lot of factor of 10 in this 2021.
Excellent.
How about you, Benton?
I am not a technical analyst here, but I believe it's going to be over the all-time highs of, 430. So I think it's heading that direction. So things are looking good.
I'll make a final comment on this. So I was on I think it was Tezonomics podcast last year at this time, and I predicted in 2020 we wouldn't go higher than $4. We'd max out at $4. So that's pretty dang accurate, guys. There was a lot of optimism, and I kind of quarreled that a bit. But I will say I think you guys are right. $20 to $30. What I look at is something like a Lisk and what that did in 2017. I think we could be somewhere around that price range. Yeah, so I'll say $25, right in the middle there. But, this is all for fun. We never offer investment advice. No one should take our words for anything more than just a fun little guessing game that we're doing here. So I think this was a really fun episode. I hope the audience really enjoyed watching it. That being said, I want to give you guys an opportunity to make any kind of closing statements. Maybe you can direct the audience to follow you in a certain place or say your website here. And Kevin, why don't you go ahead and start?
Yeah, so you can go to StableTez.com to see all the stablecoins coming out. You can go to Tezos.finance, which will be updating soon to reflect all the changes that are going to be happening in Q1 2021 for the Tezos lending system. And by the end of the month, we should have TezosExchange, Tezxx Bridge, which will enable the swaps between ERC20 and FA tokens. So look for that. That'll be great. And to see all the stuff together, go to Tezxx, go to stable.tech. That's where the StableTech stuff is.
In my case, I'm closing. I will say first, I'm very excited by the EDO next project, next protocol update. It's gonna also allow for ZK channels, and another thing that is really interesting to see popping up. So it will be Lightning Network style on Tezos, but with the ability to have zero knowledge encapsulated with that. So it's really, really great. I mean, EDO is really going to be a major upgrade. So if anyone wants to follow, we are at Hayek Lab, at hayeklab.com. Sorry, hayeklab.com, or Twitter account at Hayek Lab. And it's based on Frederick Hayek, if you know about this guy. Wonderful guy. That's it.
Excellent. Well, thank you so very much, guys. Again, this is Kevin Mehrabi, Phil Champagne, Benton Yan, and I am Ken Garofalo. Thanks so much for watching. Follow us on Twitter, YouTube, Instagram, you name it, guys. Any social media, we're on it. And CryptoLiveLeak.org, of course. Check out our swag shop. Until next time, guys,